AVGO is one of the most important AI semiconductor stocks in the market, and right now, it's doing something that every trader should pay attention to. It's coiling. For weeks, it's been range-bound. Up and down, no real trend. Most people have written it off as just another dead-money semiconductor stock. But here's what the charts are telling us. The tighter the coil, the bigger the move when it finally breaks. If you're new around here, do me a favor. Hit subscribe. The free daily note is linked in the description. No paywall, no spam, just the note. Let's start with the setup. AVGO closed Monday at $392.23. Not a big move on the surface, up less than 1%. But look closer. The stock dipped to $374 early in the session, then rallied all the way back to close near the highs of the day. That's a bullish reversal candle, and it happened right at the short-term support line at 385. But here's what really matters. Volume. 17.3 million shares traded Monday. That's down from 23.6 million at the peak last week. A 27% drop in volume in just a few sessions. Normally, declining volume is bearish. It tells you there's no conviction behind the move. But in a consolidation, in a coil, declining volume is actually constructive. It means the sellers are running out of steam. It means nobody's in a hurry to sell at these prices. And when sellers get exhausted, it doesn't take much buying to push price higher. Pull up the chart and you'll see what I mean. Price at $392, short-term line at $385, mid-term at $393, long-term at $379. Price is sandwiched between the short and mid-term lines, only $8 between them, and those lines are converging. The range is literally getting smaller every day. That's a coil, and coils don't last forever. So let's run both sides. The bull case first. Number 1, the volume pattern. Declining volume during consolidation is classic before a breakout. The sellers are done. The stock is just waiting for a catalyst. Number 2, the short-term line held as support. Monday's dip went down to $374, below the short-term line, but buyers stepped in and pushed it right back up. That tells you there's demand at these levels. Number 3, AI is still the strongest theme in the market. If semis catch a bid, AVGO is one of the first names big money buys. It's one of the most liquid, most institutional AI semiconductor names out there. If we get a daily close above $393 with expanding volume, that confirms bullish alignment. From there, the next stop is the top of the channel at $438, roughly 12% upside from current levels. Now the bear case. Number 1, the trend is still down. Short-term below mid-term. That's bearish alignment. Price has to prove itself by breaking above the mid-term line. Until then, the bears are still in control structurally. Number 2, AI stocks have been volatile. One bad headline, one disappointing earnings report from a major player, and the whole group gets taken out. AVGO wouldn't be spared. Number 3, the broader market is still fragile. We've had a big bounce from the lows, but there's been a lot of damage. Bear market rallies can be vicious, and this could just be one of them. If we fall back below $385, the coil resolves downward. The next stop is the recent swing low at $369.50. If that breaks, there's not much support until around $360. So which is it? Honestly, I lean slightly bullish here, because the volume pattern and the way the short-term line held on Monday's dip tell me buyers are stepping in. But leaning is not the same as being certain. I don't have a position yet. I'm waiting for confirmation. Here's my plan. 2 ways to play this. If you're aggressive, you can start a position around $392 with a stop below $369.50 and a first target at $438. That's roughly a 2-to-1 reward-to-risk ratio, but keep the position small because this remains a counter-trend trade until confirmation. If you're patient, and I think most people should be patient, wait for a daily close above $393 with expanding volume. Then, either buy the pullback to the breakout level or buy the next day's continuation. Your stop goes below $385. You may miss the first $5 to $8 of the move, but you're trading with confirmation, not hope. Either way, know your level before you get in, know exactly where you're wrong, and don't size up until the setup confirms. The structure is still bearish until proven otherwise. AI semiconductors remain extremely volatile. The broader market is fragile, and coils can resolve either way. Trade the setup you see, not the one you want. The coil will break soon. Be ready, but don't force it. Trade safe.